What's up, you guys? It's Jonathan the Trading Chemist back with another video, and today I actually wanted to talk with you all about how to use the fib levels to actually exit a trade, right? So most traders actually enter with the Fibonacci levels, but the money is really into knowing how to get out of the trade using Fibonacci levels, right? So in this video, I'm actually going to explain how I use fib extensions to lock in profits before the market turns on me. The first thing that I'm looking for when I actually am looking to use my fib is a break of structure, right? So we have a break of structure right here. And when we have a break of structure, I am looking to use the fib where I place it at my swing low to swing high. And it's vice versa for if this was a sell as well, right? So this is in a bullish direction and we're using the fib from point A to point B, right? And then we're looking for it to pull back, right? And in this instance, it actually pulls back to my 38.2 fib location, right? And I have two specific TPs that I use. I actually use the negative 27.86 and the negative 61.8. And this is my main reversal area, and I won't trade past this area whatsoever, right? So if price ever comes within my blue zone, which is the 23.6, 38.2, and 50, I'm always going to take it up to the negative 27.86, right? But if price pulls all the way back to my 61.8, 78.6, or 88.6, or 100, I am either going to take it up to my negative 27.86 level, or I am going to take it up to the negative 61.8. But I never take it past this level, right? And I usually go for the safest route, which is the negative 27.8, because with all of this that I am still explaining, this is a high probability. These are high probability areas where I'm looking for price to actually hit. They don't have to hit these areas, right? So just take that with a grain of salt, but this is what I use personally to exit my trades. So, so whenever it pulls back to any of these levels, I actually have two areas where I can either scale out of or use as my overall TP, right? So being that, let's say price actually pulled all the way down here to this 78.6, I will be more comfortable taking it to that negative 61.8 level just because I know that there's actually structure up here where it can actually hit, right? So I look for those type of things when it comes to picking where my TP would actually be at. So in this instance, since it hit the 38.2, I would have gotten out of the trade at the negative 27.86, and I would have called it a day. No questions asked. But look for a sell example so you can see it in both instances. All right, I got one right here. There's a breaker structure right here. And we're going to take the fib. What just happened? All right. That'll help. All right. So there's a breaker structure right here. And we're taking the fib from a swing high to a swing low. All right. Price pulled back, hit my 61.8% fib level. So I then would have taken it all the way down to the negative 61.8. And that would have been a 4.91 RR, and I would have been done for the day. And you could see as well how price actually starts to turn around on you. So I never go past my negative 61.8 level, right? So when using fibs, they are, well, especially when I use them, they are my entry and exit tool that I use, right? And this kind of helps me just simplify everything in the market and not just guessing where I should or shouldn't get out. I've back tested this many times, and it's proven time and time again that it works. So this is just my simplified method of actually getting out of the market and also into the market as well. But if you really enjoyed this video, like, comment, and if you want a more detailed explanation of how I use my fib and each of the intricate fib levels and what they actually mean, I'll do that breakdown as well. Just let me know. And yeah, that's all I have today. So I'll catch y'all on the next video.